Hey everyone! So, last time I talked about properties in Taiwan and it was a really extensive topic. Honestly, in Taiwan, properties are a very confusing process and so it really needs a lot more discussion. So, I want to go ahead and talk about mortgage rates and mortgages in Taiwan as a whole. Now, before I begin, I need to make a quick disclaimer. I am not a professional. I am not giving you any sort of advice here. Everything you need to do or understand is up to you. You must do your own research. I'm only giving my personal thoughts and experiences on this, but this is not professional advice. So, with that being said, let's go ahead and begin. So, let's go ahead and jump into mortgages. What is the first thing to understand about this? Well, there are many first things to understand, but the main thing is very straightforward. It is really hard to understand how mortgages work in Taiwan. And here's why. Honestly, the information is not as transparent as other places. If you get on YouTube, if you get on banking websites, even local Taiwan bank sites, the information and the step-by-step process is just not that clear. And so you have to actually just go ahead and do a lot of this research on your own. Unfortunately, you can't just go on a website for a bank and just have like a mortgage calculator ready to go. A lot of those details need to be done in person and they must be discussed in detail. So first things first, step number one, you must be a resident of Taiwan. It is okay for foreign nationals to own property and to have a mortgage here in Taiwan. However, there is a main caveat here. You cannot get a mortgage without living in Taiwan and having a sustainable and significant income. So there are two conditions you must meet. The first one is you must have some sort of significant residence here in Taiwan and a proven track record for that. The second thing is you must have enough salary to satisfy those requirements or those lending practices. If your salary is way too low or is not stable, then unfortunately, a lot of banks will consider you to be too high risk to go ahead and provide you with a mortgage here in Taiwan. It is difficult as a foreign national, so it is important that these two criteria are met in order to qualify for that mortgage. So what indicators are banks looking for when you apply for mortgage? Well, as I just mentioned, the key takeaway here is your salary. They're gonna wanna see last year's salary in full, the total amount, including all the variable bonus that you achieved, not just the base salary. That will be the first thing. However, the other criteria as to why or when or how they would provide a mortgage are very undisclosed variables. It is very unclear, and even myself, I really do not know exactly what it is. I just know that they have a way of communicating themselves and deciding whether or not to provide a mortgage for foreign nationals. However, I have a few guesses. The first one might be any sort of credit history. If it's positive, for example, you have a credit card in Taiwan and you've been paying it off, you've been a reliable vendor. Another thing is your base salary. I'm guessing that could be a possibility. I'm not 100% sure. There could be other factors as well. For example, how long you've been in Taiwan, with the idea being that the longer you've been here, the more likely it is you were to get a mortgage, and the shorter time you've been here, the more unlikely it would be. There's just other variables that unfortunately banks are not going to go into details and be very transparent with. So this is really one of the biggest challenges right off the bat, is the transparency to information is unclear here. Whereas in other countries, it could be a lot more transparent and a lot less opaque in understanding that. Now, let's go ahead and jump into the next topic, which is understanding mortgage rates and the percentage. So now that you are in a situation where you could potentially qualify, what is next? Well, the next step is understanding what you will be paying for your mortgage rate. Now, obviously, mortgage rates aren't like a fixed interest. There are so many different variables that come to play, and that goes for any country. The US has a lot of variables, Taiwan is the same. However, there's a few main ideas and main factors that go into play and a few general trends. So I will go over this really quickly. The first things first, what type of yearly periods will you need to pay your mortgages for? So for most people, they either select 20 years or 30-year mortgage periods for them and their families, or themselves, depending on, they're just gonna buy that property or just living it by themselves. Who knows? Anyways, it's either 20 years or 30 years, but there also is 40 years. And these are three different categories. 40 years, I have to say, it's not as common in Taiwan, but you will see it. Most people don't go for 40 years because it doesn't decrease the amount paid monthly by a significant amount, but it adds an extra 10 years to the timeline. Likewise, 20 years is just not that common either, although it is seen more often. The reason why 20 years is just not that common though is because it definitely is a higher monthly amount that needs to be paid off every month. So most people will be picking the 30-year category. Now, if you pick 30 years right off the bat, I would say in general, over Taiwan time and Taiwan history, 1.5% to 2.3% is usually the type of mortgage interest that most people are paying. Now, on really good times, when the interest rate is low, both at the world stage and in Taiwan, I think 1.5 to 1.6% is definitely the mortgage rates you're paying, which is extremely low. However, even right now, when things have increased and interest rates have increased here in 2023, right now, I would say most people will probably be getting a loan for around 2 to 2.1%, which is still extremely low. If you compare that to, example, the United States, which is about 6.6 to 7% in their mortgages, it just makes a huge difference there. It is way cheaper in Taiwan to purchase a home and have a much lower expense. So the interest rates, even though the property values can be very high in Taiwan, the interest rates are very, very low. Now, there's another item we must consider, which is the down payment. So, fortunately, in Taiwan, it is similar to other places. The expectation is 20% down payment. However, I know there are other places in the world where you don't have to put 20% down payment. I know for a fact that in the US, you can pay a down payment that is lower than 20% and go ahead and claim that home or start making mortgage payments on that home. Although I believe there are additional expenses involved in that. However, in Taiwan, to my knowledge, there is no such thing as getting a mortgage rate that's lower than 20%. For the most part, you must have a down payment of 20% no matter what. You must be able to cough up that money. However, 20% is the lowest, but there are some properties, especially more of the smaller units that are scattered throughout Taipei, that will require even more deposit or more of a down payment before you can be able to apply for a mortgage. And those usually go to 30%. So those amounts are even higher than the 20% amount, and you must be able to have that money on hand in order to be able to get a mortgage from these banks. Now, the next thing you might be thinking is, well, there's so many banks in Taiwan. Where do I go? There's First Bank, there's HSBC, there's DBS, there's China Trust. Which bank do I go to get that mortgage? That is a really tough question. I will go ahead and explain why that is. But there is a certain process in which this can be done. So let's go ahead and talk about that. Which bank do you go to for your mortgage? Well, most people, and the first choice I would recommend is wherever you receive your payslip. I know this sounds really weird, especially if you're not already working in Taiwan. But if you're working in Taiwan, you will know that you will receive your payslip in the bank that your company works with. So, in the United States, as an example, you can go ahead and receive your check or your direct deposit and direct it to whichever bank you choose to do so. But in Taiwan, this does not work this way. Instead, what happens is very straightforward. Your company will pick a banking partner and your salary will be deposited into that bank. When that happens, you will have an account with that bank so that you can be able to withdraw your salary outside of that bank account. So many times I would recommend that the first choice you go to would be the bank that you already have an existing relationship with. And the most obvious relationship would be the one that you have, because this is how you're being paid by your employer. So that would be option number one. Discuss with them tell them you want to look into a mortgage, ask them what they expect, what salary level you must have, and so forth. And they will be able to help you. Or in a more negative way, they might be able to reject you too. Either way, that's the first choice. The second choice would be banks that you have other existing relationships with for whatever reasons. Two examples come to mind. The first one is if you opened a credit card with another bank, you have some sort of relationship there already. One good example would be the Costco credit card. In the past, they used Cathay Bank, and in the future, they will be using Fubon Bank. I have used the Costco credit card in the past. I've worked with Cathay Bank, but only as a credit card user. So in the future, if I were to consider mortgage, I could, in theory, go to Cathay Bank and explore mortgage options because they have had a history with me in which I have paid my credit card on time, punctually, without any issue. Secondly, if you are working with a construction company and you're not buying a home that has already been used, then this is another example as well, and a special exception too. If you are working with a construction company and you will be the first home purchaser for this newly built apartment or newly built construction, then you will be able to work with banks directly. This is what happens. Most of these construction companies, they will work with one, maybe two banks to finance all of the future home buyers for these apartments or these rooms. And the way it works is very straightforward. They might build an apartment that's 15, 20 floors, and each floor has 10 apartments. So if you do the math, make it very easy, that could be around 200 apartment rooms that people could purchase and rent out or live as a homeowner. And so the idea is they build a property and then they work with a bank to provide unique and very low mortgage rates to all 200 potential buyers that are buying this property. So that could be another way or another route to explore other mortgages and see if you can find more competing offers at lower values, lower interest, I should say. So those will be other options in lieu of banks that provide your payout salary. Now, what is there else to explain or to understand? So imagine that you were able to secure your mortgage. Here's a few things that you should probably understand, or if you're really considering this. First things first, if you get a mortgage, be prepared to pay a lot more money than if you were to rent this apartment. When people get mortgages, they are usually paying double what people pay in rent. So, for example, if this property could be rented out for 20,000 Taiwanese dollars a month, most of the time the mortgage could be around anywhere from 40,000 to 45,000 Taiwanese dollars a month. So understand that this will cost more money than renting, and this will be a monthly fix. The second thing that you should understand is that there's certain criteria and caveats to this. So, for example, there are some rules or some ideas of tax exemptions or tax regulations if you are a homeowner. This, again, will have to rely on you and doing your own research to see if this is something that could be suitable for you. Secondly, there are such things as only interest payments for a certain period of time. I believe that it's anywhere from 2 to 3 years where you simply just pay the interest and you don't pay any of the principal of the mortgage starting off when you purchase the home and you have that mortgage. So there are other criteria in play. It's not just as simple as I have my mortgage and I'm ready to go. So I hope that I was able to provide some insight and understanding of mortgages in Taiwan. It is a confusing topic for sure. And even myself, I feel that all of that information is not transparent. One last point I have to say, and this is a bit unfortunate, but there is a criteria and a rule from all banks throughout all of Taiwan that if you are a foreign national, you will have a slightly higher interest rate because you are seen as a slightly higher risk here in Taiwan. So be prepared to be comparing slightly higher interest rates. However, the good news is it's really not that much more significant. we're talking about 0.1% at most, you know. So I don't think you will lose too much sleep over this. But it's still an uneasy feeling. I think most people should understand that, you know, before they make any sort of investment or purchases under their name. With that being said, I hope that I was able to provide that information. I hope all of the best. And if you're looking to purchase properties here in Taiwan, I wish you all the best. Until next time, Culture Ninja out.